Good afternoon and welcome, everyone. So today I'm going to focus on cash flow. I think this is one of the most important topics for small business owners, especially over the last couple of years. And I think going forward, it's going to be more important. I've been educating business owners for over 25 years now, and I find that this is one of the biggest challenges. I really find that this is something that they struggle with. So one of my objectives today is to show you how do you manage cash flow in your business. One thing I need you to know, and it's very, very important, is that cash flow is the lifeblood of our business. Doesn't matter how smart we are, doesn't matter how brilliant our idea is, our concept, but at the end of the day, if you don't have cash flowing through your business, you have a major problem. And I've realized this over the years that this is the one reason that business owners struggle. They really do. Actually, it's very interesting that they've done research on this, and they say that 80% of small business owners that fail because of cash flow. So I want you to be aware of this. This is a major challenge for you, and this is a major challenge for me. And we've got to learn how to manage this. Actually, for me, this has been the absolute nightmare. Throughout my business life, this has been the absolute nightmare. I think I've almost become paranoid after all these years. So when I invoice somebody, I always want to know in advance, how am I going to get paid? And if I'm not sure that I'm going to get paid, I don't know, it just impacts the way I do my work. And I think it's really important that you understand. The other thing that I often say to people, does cash flow hurt or does it have an impact on you? I think sometimes to the early days of my business, and some of you've been through this, you've created a product or you created a service and you've delivered it, and it's usually something that you worked on really hard and the person doesn't pay you. And I want you to remember that feeling, because I think it's very, very important as a business owner that you realize that that feeling that you had when you first sold that product or service and you didn't get paid, it's a very, very important feeling and a very important lesson as a business owner to learn not to let that happen again. The other thing I want you to understand, and I think it's important that all of us understand, is that cash flow is our responsibility. Often as a business owner, and I recommend this to all business owners, is our financial statements, our income statement, our balance sheet should be created by our accountants at the end of the year. We shouldn't be doing it ourselves. They should be doing it for us. But the cash flow is our responsibility. And many times over the years, I've spoken to business owners, and this is their biggest nightmare. They've got employees to pay this weekend, and they're not sure if they're going to have enough money in the bank. And these are some of the things that we've got to realize. At the end of the day, even if you've got an accountant, even if you've got a bookkeeper, even if you've got advisors advising you, when you run out of cash flow, this becomes your responsibility. And this is why the earlier you take, you realize that this is your responsibility, the better it is for you. It's not something that you hand over. It's not something that somebody else manages. It's something that you manage as a business owner. And the other thing we need to think of, which I think is very, very important, is that you can be a very profitable business. And I've seen this many times over the years, very, very profitable businesses that still have cash flow problems. And I mean, one of my favorite examples is businesses that have inventory. Yesterday, when I was doing the pitching competition, there was a business owner that did sewing lessons and sold fabric. And one of the comments I made was the challenge of the inventory. When it came to selling fabric, is you've got this money tied up, which could be a big, big problem. And this is something you've got to be aware of as a business owner, is even if you've got a very profitable business, for example, a fabric business is a very good example. The profit margins on fabric are very, very high. The problem is that if you don't buy the right fabric and you don't get the stock turns, your profit is not that high. So I want you to think about this. I want you to understand that whether you like it or not, this is your responsibility. Cash flow is your responsibility. And the sooner you learn how to manage it, the better it is for you. So understand this. The sooner you learn how to manage this part of your business, the better it is for you as a business owner. So understand that. So let us try and address what actually creates cash flow problems. Because one of the things you'll realize very, very quickly is if you can identify what the problem is in your business, and depending on what the business is, if you can identify what the problem is, you can then address it. So I'll give you a very good example in our business. We do a lot of government work. We do work with cities, we do work with provinces, we do work with the federal government in different parts of the world. And one of the challenges we have, for example, is them taking a long time to make a decision. So we'll put in a proposal, they'll like the proposal, it'll take them 4 or 5 months to approve the proposal. So that's the one challenge we have from a cash flow situation. The other challenge we have is payment. You know, you'll send invoices to government clients, and I find that 9 out of 10 times, not always, but 9 out of 10 times, they will pay us late. And usually it's silly reasons. You know, they forgot to give us a PO number, or somebody that usually authorizes checks is off on vacation or whatever it is. So what you want to try and do is you want to try and identify what's creating those problems. What is creating the cash flow problem in your business? And you want to address that up front. And I think this is really, really important that you think about this. But just some of the main reasons that people have cash flow problems. The first one is obviously your sales. And I think that in most cases, you know, sales solve most problems. As long as it's profitable and you're being paid on time, sales solves most problems. So as a business owner, I've got to focus on sales and marketing. I really have to. This is a key part of me building my business, of growing my business. I've got to spend a lot of my time focusing on generating revenue. The second one is your expenses are too high. I was going through some of my goals for 2021 earlier on today, and I see that one of the bullet points was reduce the business's overheads over the next 12 months. And I'm very happy that I've achieved that. But it's really important that you as a business owner, you know, go through every single expense in your business, every single expense, and try and see if you're getting value for money. Again, it's not always about getting the cheapest service or the cheapest product. It's about getting value for your money. And sometimes you don't mind paying a little bit extra, but you've got a valid reason for doing that. Maybe you want a better quality product, or maybe the service is reliable, whatever it is. But one of the key challenges in businesses are expenses. And I want you to monitor every single one, the $10 expenses and the $200 expenses or $1,000 expenses. They all need to be monitored. The third thing, which is always something that really concerns me as a business owner, and I understand why. I was a retailer for 11 years, and we had a massive inventory, a regular cash flow problem with massive inventory. And the other challenge we had is that often we had to pay for inventory before we sold it, which is a very, very common situation for small business. So this wasn't anything unusual, but in my case, because we didn't have money, this was a bad thing. So I became obsessive, absolutely obsessive when it came to managing our inventory. I never wanted too much inventory in our storage areas. I wanted all on the shelves, and I wanted the goods to be moving as fast as possible, because then I ensured that our cash was flowing. We were getting that turnover, which is really important. And if you don't have inventory, obviously it's not a big issue, but if you do, it could be a major issue, especially with the growth of e-commerce stores and things like that. I mean, for example, some of the logistics problems that retail has been having over the last 12 months is a good example of some of the challenges they have. Is if you don't have a good inventory management system, you've got a problem. People that use platforms like Shopify actually have now got a feature where they can project or predict your future inventory needs for you. So this is quite useful. The next thing you need to think about is the pace that you are growing at. And, you know, most of us, maybe not all of us, but most of us want to grow our business, you know, especially now that we've got a bit of inflation around. your business needs to grow. Here's my advice to you, is that you do not want to grow your business too fast. And the reason you do not want to do that, because it creates problems. It creates problems with your customer service levels. It creates problems because you need to employ new people. You need to increase your inventory. You need to increase your receivables, which have major impact on your cash flow. So what I recommend you do is you monitor your cash flow and ensure that you grow at a pace that ensures that you don't have cash flow problems. So really important things that you've got to think about as a business owner. Oh, the last point I forgot out was not collecting your money fast enough. And this is a real big issue. I'll give you an example, a scenario. I had a small business owner on one of my training programs years ago, and she phoned me up and she said to me, Andrew, I've got a serious problem. I said, what's the problem? She said, well, I need to borrow money. And here's the thing I always say to small business owners, never try and borrow money when you need it. That is too late. You need to borrow money long before you need it. I recommend if you're a new business, try and get as much capital up front as you can, or at least access to capital, because what happens is when you need the money, I got a feeling that even the banks can smell how desperate you are, and they're not going to lend it to you. So anyway, so she came to me and she said to me, I think I need to borrow more money. And I thought, that's a problem. And the urgency of it even made it a bigger problem. I said to her, okay, so let me just try and ask you a few questions. What are your sales been like? She said, sales have been really good. Your expenses, how are they doing? No, we've been monitoring. We've got them under control. She obviously didn't have inventory. I said, how are you growing? She said, at a good pace, not too fast, not too slow. And then I asked her a really simple question. I said, when you sell your services, what terms do you give your clients? So let's say she does $100,000 of revenue a month. Her accounts receivable should be $100,000 if she gives 30 days. And so her business, she used to give her clients 30 days. Let's say she was doing 100,000. I don't remember what she was doing, but let's say she was doing $100,000. The maximum receivables she should have should be about $100,000. Okay. So I asked her what was the receivables, and she said $150,000. So here's the issue she had. It wasn't that she needed more money for the business. She was not collecting her receivables fast enough. And you've got to be very careful of it. Because I find that many business owners, I don't know, they're afraid to ask for their money. I'm never afraid to ask for my money. I'm never afraid to follow up and say to a client, the money's not in the bank yet. Because I've realized that's the only way my business can survive. The only way my business can survive is by getting cash through the business. That is how I survive. Now, one of the biggest challenges we face as a business owner is how much money should we take out of our business every month? And there are two decisions you need to make here. It depends on what stage your business is at, because if your business is at the growth stage, you want to leave as much money as possible in the business. And if you don't have to take a salary, I'd recommend you don't take a salary out of the business. And the reason is that cash flow is like oxygen for a business. So that's the one issue. As your business starts growing, I recommend you take a salary. The second option you have, if you incorporate it, is to take a dividend. So instead of taking a salary and paying monthly taxes, you could take a dividend. And this is where sitting down with your accountant is really useful. But I want you to understand how the income tax system works. It's really quite simple. Is the more you earn, the more you pay, which is logical, but it's not that simple. What happens is that there are certain bands when it comes to earning. Let's say, for example, if you earn $30,000 a year, you'll pay so much income tax. Every extra dollar above that, usually your income tax rate is higher. So it's really important that as a business owner, you do not take too much money out of your business. And if you're going to take a salary out of your business, I encourage you to take a fixed amount, because I've heard business owners saying this over the years. I've heard them saying, you know what, when I need money, I just take it out of the business. And I don't like that way of running a business. I want you to run your business like it's a business. I want you to separate the two, you as an individual and as a business. I know, for example, many times in my personal life, have no money. So people will say to me, do you have $1,000 or $2,000? I have absolutely nothing. But my business has assets and it has money. But I separate the two because I think it's very, very important, because I understand the income tax system, that I separate the two. The one is me as an individual. The other one is as a shareholder of my corporation. So one of the things that I do every year, and I'm going to encourage all of you to do, if you've never done it before, I'm going to encourage you to do it going forward, is a personal budget. And let me just say something to you. I do not need to create a personal budget every year, but I do. And the reason I do it, because I think it creates discipline. This is the way I think. I believe that if you are disciplined in your personal life, it carries across to your business. Why? Because it's the same principle. Really, it's the same principle. The principle is exactly the same. Whether you're managing your household or you're managing your business, the principle is exactly the same. So what I recommend to everyone, actually, I'm going to be doing a course program now. I'm traveling to Portugal next weekend. So not next week, but the week after that, on the Sunday night, I'm traveling to Portugal, where I'm going to be doing a course on financial literacy. And one of the first things I'm going to teach these people, first things, they're not business owners, but one of the first things I'm going to teach these people is how to create a personal budget. Because here's the lesson I've learned as a business owner, is if I earn $10 and I spend $10, I will not accumulate wealth. If I earn $10 and spend $9, I will accumulate wealth. And for a business owner, this is more important than a regular employee. Why? As a business owner, I have to create my own pension. I have to create my own pension. I'm an individual. I want to manage my own money. I don't want anybody to dictate to me what I need to do. And if I did, I would probably be working for somebody else. So this is the way I am. So I want to make sure that I accumulate wealth. So one of the things that I do every year is I go through my expenses. Okay, so I go through my expenses at home and I write down every single expense that I have. And I don't know what my expenses are off the top of my head, because I got it on a spreadsheet. But here's an example of a regular household. So don't think that I spend this amount of money, just in case you say, this is how much Andrew spends every month. So let's say this was my bill every month. Okay, so there you go. So now I know exactly how much it costs me to live every month. And let's make an assumption here. Let's say I've got a partner and she works in, I don't know, she works in some industry and she earns $2,800 net every month. So after taxes, she earns $2,800 working part-time in this industry. Now this can tell me exactly how much I must withdraw from the business every month. I can withdraw this as a salary if I want to, or I can decide to withdraw this as a dividend. So there's a scenario. But let me give you another scenario. So in this case, for example, you'll see that my outflow is $18,000. Okay, so I have more outflowing than inflowing in my business. So I could decide then to take a drawing of, say, let's say $1,600 a month out of my business. Okay, so basically I speak to my partner. She's going to finance most of the home over the next 3 years. And this is the way I like thinking about it. It is short-term pain for long-term gain. So what we're going to do is we're going to live on a budget for the next 3 years until the business is making really good money, and then we can splurge a little bit more. We'll never be splurgers because we are business owners. That's the way we think. So that's what we'll be doing. But let me give you another scenario. Let's say, for example, you don't have access to other funding. You have access to no other money, but you need to live. So you're starting this business. this has been your dream, or for those of us that are existing businesses, this has been our dream, is to build a successful business. And now we want to give the business a bit of time, let's say a year or 2 or 3, depending on the nature of your business. I mean, most businesses that I have worked with over the last 25 years, some of them are profitable the first year, but most of them maybe second or even third or even fourth year. So it takes a bit of time to be profitable. And the thing you want to do is you want to grow your business. So if you want to grow your business, you want to take the least possible amount of money out of your business. But let's look at a couple of scenarios. Let's say I'm currently working for a boss and I want to start my own business. This would be really helpful for me to work out how much I need to set aside so that I can get my business up and running. So based on this, I need to set aside $51,000 in the first year so that I can get my business up and running. So let's say I would save up 51,000 or 52,000, whatever it is. Or let's say I want to borrow it. Maybe I'm going to borrow from family members, which is a very, very common thing nowadays. Is, I want to borrow money from family so that I don't have to take money out of my business. And how much do I need to borrow? Let's say I borrow $52,000. There you go. So now I don't have to worry about taking money out of my business in 2022 because I've borrowed money from this family member, which I'm going to start paying off after I've been in my business for 3 years, and I know exactly how much I need to borrow. Or let's use another scenario. Let's say, for example, I can't borrow. Maybe then I can apply for a line of credit, okay? So maybe I've got I own a home, I can apply for a line of credit, and we're going to live off the line of credit for the first year or 2 so that the business can grow. And these are really, really important decisions. But here's the thing I want you to understand. The decisions you make in your personal life are exactly the same decisions you make in your business life. Or let me give you another scenario. You know, I always say to business owners that the way we accumulate wealth as business owners is usually we make profit. Your best investment as a business owner is yourself and your business. And never forget that. That is the best investment. I get very concerned when business owners get a bit distracted. You know, they're growing their business, and then all of a sudden, you see they start selling. And I was listening to a story about a guy the other day that started selling watches. Then you've got other business owners. You know, you've got to focus on one thing, and you've got to do that really well. Once your business is established, then you can make decisions. And typically, as business owners, we invest money in real estate and in buying shares in other companies or buying shares on the stock exchange. So let's use an example of, let's say I want to invest in real estate. This is how I make my decisions investing in real estate. So let's say, for example, I'm investing in a property. It's costing me, let's go buy something in the state of Florida. It's costing me $160,000 and I will get $1,600 of rent a month. Okay. So I'm getting $1,600 of rent a month, not 16,000. Okay. So $1,600 of rent a month. I can put it into here and it'll tell me exactly how much money is going to outflow out of this property every year. And it can help me make the decision of whether this is a good investment or not. So this is exactly what I do. So not only do I use this to create a budget for myself, but I also use it to calculate the viability of ideas that I come up with when it comes to investing in real estate. So this is why I like teaching this, because now you've got a model you can work with. You can use this template for your personal budget for home, which is a very, very good decision. And then also you can use it to invest in real estate. The other parts of your business help you invest in stocks. So for example, if you want to educate yourself about investing in stocks, probably the best way for you to do it is to understand the income statement in your business. Because once you understand that, you can evaluate companies and then you can make decisions about where you want to invest. So as a business owner, These are a couple of things that you need to focus on. You need to focus on managing your outflow. This is really, really important, and it's going to become even more important over the next 3 years, is you want to ensure that the outflow going out of your business is not higher than the inflow. And I know this sounds, to some of you, this sounds very, very obvious, but I can't tell you how many times, even this week when I was listening to pitches, how people, I'll ask them a question. I'll say, so how much revenue will you generate? And they'll say, so much. Then I say, how much is your outflow going to be? And they tell me, and I say, but how are you going to live? How are you going to survive every month and keep your family sustainable? So those are the things that sometimes people don't think through. And why don't they think through that? Because they make decisions with their hearts and not with their heads. And I think this is very, very important that you as a business owner make decisions based on numbers. It's really about the numbers. How much money is going to flow out of my business every month in 2022? I need to know what that number is, because if I don't know what that number is, I could have a cash flow problem, or even worse, go bankrupt just because I don't know what it is. So one of my objectives is to manage my outflow and increase my inflow, because once you have that situation, it's a beautiful thing. So you have money flowing out of your business, but the money flowing into your business is more. You got a little bit of money in the bank. It's very, very comforting, especially if you've been in business for a while like me, and you've got $2 or $3 in your bank account and you don't need the banks anymore. That's the best feeling in the world. But that takes discipline. That takes being frugal. That takes managing your cash flow. Those are the things that it takes. And it's very important to understand that. The other thing you want to do, which is really, really important, is you want to manage and reduce your fixed expenses as much as possible. So what I'm going to do is I'm going to give you some tips on what you can do. And all of these things are doable. You know, the answer, I always say to business owners, is if you don't ask for a discount or if you don't negotiate, the answer is always no. So don't be afraid to negotiate, to ask, to do these things on a regular basis, because every single dollar that you save in fixed expenses in your business is an extra dollar of profit in your back pocket. And I want you to understand that, obviously, after your income taxes. So this is what I recommend to all of you, especially this time of the year. It's November, nearly the end of November. All of us should be now working on our cash flow forecasts for 2022. So the best way to do that is to go back over the last 12 months. Or you can go over the last 24 months, whatever you want. Or if you think 2019 was a more accurate year than 2020. But it's very, very important that we go through our expenses. Actually, I encourage all business owners to go through their expenses at the end of every month. Why? Because then you'll see little mistakes, you'll see little overcharges, you'll see these things that are happening, and then you can address them immediately. Otherwise, what happens is these costs you start incurring costs and small amounts that often start accumulating. So reconcile your bank statement, okay? What does that mean? Is check your bank statements, go through them. And most of us small business owners, it's not too much, maybe 1, 2, or 3 pages. It's not a lot of information. We can do it once a month. I know I do it every month on the 15th. The 15th of the month, I go through the previous month's bank statement, and then I enter that information onto my cash flow forecast so that I can monitor and see if there's any high expenses. The other thing I encourage you to do is to reconcile your credit card statements. And the idea here is exactly the same, to try and identify how much are you spending in your business, and is there an opportunity to reduce your expenses? And sometimes there isn't, but you want to at least look at it and see if there is. And I recommend you do that for 12 months. The other thing that I thought of as I was saying that I think is really important is that on your bank statement, you create alerts. So for example, on all my bank statements or all my bank accounts, I have these alerts. Alerts for when I pay things, alerts for when I use my credit card, alerts for when my balances in my account are too low, for example, in my personal accounts, I have a number. So if it goes below $500, it sends me an alert, says your bank balance is below $500. And the reason is because then I know I don't overdraw my account. So there's two benefits here. One is you don't overdraw on your account. And the second one, which is more important for me, is if anybody ever steals my credit card or my credit card information and uses my credit card to buy something, my bank's going to alert me straight away. So as soon as a payment has gone through, as soon as a purchase has gone through my credit card statement, I'm alerted straight away, and then I can contact my bank and then reverse the charge. And most times the banks will do it. Here's the thing, the longer you leave it, the worse it is. So you want to address it immediately because it could create cash flow problems. The other thing I encourage you to do is, I believe that over the next 2 or 3 years, maybe in 5 years, there are going to be quite a few programs for small business owners to help you through this really difficult time. So I know of quite a few in where I'm based, but I encourage you to do your research. Go to your local small business center, do a bit of research online, but just be very, very careful. I do not trust doing research online all the time because there's all these scams. People that'll make you promises that if you give them a few $100s or a few $1,000s, they'll help you get government grants and things like that. Just be very wary of those programs. I do not trust those programs. I think I've been in business too long, and whenever something sounds too good to be true, I start thinking there must be a catch. But the governments have created programs. I know I've been part of a few of them. We create the learning content for them. So I would encourage you to do your research because that may help you with cash flow. I mean, there's nothing better than getting a $5,000 or $10,000 grant from the government that you don't have to repay, that can really help you through the next few months. The other thing you want to do, I mentioned earlier on, is manage your inventory. And as a business owner, especially those of you that have large inventories, you've got to measure your inventory turns or your stock turns. You've got to be measuring those. And if you don't know how to do this, maybe speak to your accountant. They could very, very quickly show you on last year's financial statements what your stock turns were. They could also tell you whether it's too high, too low, compared to industry averages and things like that. So I encourage you to do that. I know when I was a retailer, we used to measure our stock turns every year. And there were two reasons. One, I never wanted too much inventory in my store. And secondly, and more importantly, I had a major cash flow problem because I started my business without too much money. The other thing, if you have a POS or point of sale system, is calculate, that can calculate it for you. It can tell you which inventory is turning really fast and which is not doing it. And for those of you that have e-commerce stores, most of these platforms come with that nowadays. Shopify, for example, will tell you which are your fastest selling products, how much you sold, all those type of things. It'll even give you idea of when you should reorder, because you can put in reorder levels. So I encourage you to do that. If you've got your own POS system, that's wonderful. But if you're using an e-commerce POS, the backends have all this information. The other thing you want to use is a tracking system, ideally, and it doesn't have to be fancy. I know when I was in retail, this is obviously many years ago, 25 years ago now that I think about it, is we used to use paper-based or spreadsheet-based tracking systems. And that worked really well for us. Obviously nowadays, the technology is far more affordable and much cheaper, so you can use it, but I think that's a good idea. And the other thing you want to try and do, which is quite challenging sometimes, is use just-in-time systems. The only problem now with all the logistics problems that we're having, this just-in-time might be a little bit dangerous to take advantage of. But if you buy local, it'll probably solve itself, make it much easier. And then reduce your inventory if required. If you've got too much inventory in your store, just get rid of it. Just get rid of it, put on special, get some cash into your business and get rid of it. Obviously, you don't want to be doing this too often because then obviously you're doing something wrong, but I would address that. The other thing you want to do is manage your receivables. And yet I encourage you to create a habit. Maybe every Friday you sit down, you take all your receivables, see who's outstanding, and give them a call. And it's a really good idea to follow up on these. And here's the thing: sometimes if you're that person that's too nice and can't phone for receivables, maybe outsource it to somebody like a bookkeeper or something, but you've got to follow up. I'm absolutely paranoid. If you speak to any of our suppliers, they will tell you that if you owe BizLaunch money, pay them. Otherwise, they're going to bug you until you do pay them. The other thing you want to do is you want to manage your accounts payable. Again, one of the things you can do, especially now that we're coming back, or I don't know if we're back yet, but we're starting, or I feel that we, in the next year or so, hopefully in the next 6 months, we'll be coming out of COVID. And so now we can renegotiate with our suppliers. But this is something that you should be doing if you're having a bit of a cash flow problem. One of the challenges we have as small business, and it's always been a problem actually, is that often we'll pay our suppliers up front and then we give our customers terms, which is a big, big problem. So if you can address this, it's a really good strategy. The other thing you want to be doing this time of the year, which is a big problem, because what's happened, especially over the last 6 months or so, is inflation has been really increasing a lot of our cost prices. But I think a lot of suppliers are actually just taking advantage of the system and saying, you know what, let's increase our prices now because everybody's speaking about inflation. So let's increase our prices now. That's the first thing. The second thing, you've got to realize as a business owner, if your input costs have gone up, you have to increase your selling prices. You have no option. And here's the reality: for businesses like mine, for the last 15 years, we haven't had inflation. But all of a sudden, we have to charge more for our services. So it's really important that we do that. The other thing you can do, which is actually a very good thing that I think we can negotiate now, especially now that more and more people are working from home. A lot of commercial landlords are struggling. I really think they're struggling, and I don't know if it's going to get easy for them. And this may be an opportunity for you to renegotiate your lease, or at least change the terms of your lease and things like that. And I've seen quite a few small business owners do that over the last few months. Why? Because COVID has given them a little bit of power. They can now renegotiate with their landlords. The other thing you want to do, and a lot of business owners have done a really good job of this over the last 2 years, and it's not because they wanted to, they had no option, including our business. We've changed we've changed direction, and nowadays actually do everything online. And I don't think we're going to change this model. I really enjoy running live workshops and interacting with people and all that type. I really enjoy it. But the reality is that I can make much more profit and target many more people from my computer. And I think that's what's happened with a lot of us, is it's changed our business model. But here's the thing: I realized that some of us have still not embraced it. I was at my barber yesterday to get a haircut, and people still have to phone him. So you still have to phone him and say, "Hi, Nunzio, I'd like to come and see you this afternoon." I'm thinking, it's 2021. Why do you not have an online booking system? And I think online sales is a massive opportunity for small business. I mean, it's grown phenomenally over the last 2 years. I mean, just look at the growth of companies like Shopify and Amazon and things like that. But it's grown phenomenally over the last 2 years. But I don't think it's going to stop. It's almost expected nowadays is that if you're a business, I can also do business with you online. That's an alternative source of revenue. The only thing that still concerns me about small business is they still sometimes think too local. You can sell locally, but don't be afraid to sell internationally. Online sales gives you the opportunity to sell your products or services internationally. So take advantage of that. And if you don't have an online presence now with an e-commerce portion, you have to get it very, very quickly because it's expected of every business nowadays. Other new trends that have changed over the last 2 years, delivery. I think delivery has become a massive thing. I never thought it would grow so quickly. I thought it would really grow when we had self-driving cars, but because of COVID, people have got used to ordering groceries. Actually, I got a message from, I've got some real estate where I've got tenants, and I got a message from the homeowners association saying that so many people are getting groceries and packages that they're getting stolen from their front doors. So delivery's become mainstream. It's really become mainstream. I don't think that's good for the environment, but over time, I think this is just something that's going to be part of our business. People are going to expect us to deliver. They'll be prepared to pay for it. Maybe, maybe not, but these are some of the things. Curbside pickup, another very, very common thing that we've learned to do over the last 2 years. I mean, some of us were doing it before COVID, but it's become mainstream. And then diversifying. I know we've diversified over the last 5 years. We used to only run seminars and training programs, and now we're creating content and a whole lot of different things that we're doing. The other thing is meet with your accountant. I think this is a very appropriate time now, maybe to set up an appointment with your accountant to discuss your taxes before the year end and to understand how you can save on your income taxes. I know I'm going to have a meeting with my accountant soon to discuss a couple of issues that I've got with this year. And I'm going to do it very early on. And the reason is then he has more time for me. And also ensure that your financial statements are up to date. You know, this is one of the problems of small business, especially if they're trying to raise capital. They go to the bank says to them, do you have 3 years income statement, 3-year balance sheet, and 3-year cash flows? And they don't have this information available, which is a big, big problem. Keep your financial statements up to date. Make sure your accountant gets these up to date for you. And then create a cash flow forecast. Let me just go through this template for you. I just want to go through this quickly because this stuff you can read afterwards. I think this is really important that I show you this. So this is a template that I've been using for the last 25 years. And it is a really, really useful document. So this is a regular cash flow forecast, just to show you. So you've got inflow and you've got outflow. Okay, so that's your regular cash flow forecast. So what I like to do is I like to do a sales forecast too. So every year I will sit down and I will go through it. Let's say I own a bakery, and I don't own a bakery, but let's say I own a bakery. What I would do is I'd put down all my different products. So in this case, bread, pastries, cakes, candy, and online sales, whatever. You can departmentalize it however you want. And if you needed more space or more lines, you just insert. So these are very simple templates which you can get access to. If you send me an email, all of you have my email address. If you send me an email, I'll send these to you. But you can insert more rows and columns if you want to, and it's very, very easy to do. So you can do that. What did I do there? So you can do that, and I recommend you do that. All right. So this is what I would do every year. Is I would go through it. I'd go through all these, and then I'd put down sales forecast. Where would I get this information from? From previous years. So I've got access to previous year's information. So let's say, for example, I can look at last year's bread sales. Last year, we were in the middle of COVID. Let's say I did $10,000 of bread sales. Maybe this year, I think I'm going to do $11,000. Okay. February, maybe that number comes down a bit. March, maybe even more. April, maybe it goes a little bit down. May, it goes a little bit higher. So I'll go through every single month and put in my numbers. And I recommend you do exactly the same thing. I get very concerned when small business owners just randomly choose numbers, guess numbers, and put it like I'm doing now, I suppose, and put it into their cash flow. So what I would do is I would base all of these numbers on previous year's sales, okay? Then I would look at my cost of sales. Where would I find this out? Well, my Z reading gives me my sales for the last year, and then I can see what my cost of sales are. So let's say it was 40%. Let's say it was 40% with my cost of sales. So my profit margin was 60, my cost of sales were 40%. I would then insert that into my cash flow forecast. Then I'd go through the second one, pastries. I do exactly the same thing. I think of how much do I sell every month. I'd put in the numbers and I would work that out. So every one of us will be doing something different. Okay. And I think that's very important you understand this, that every one of us would go through our individual numbers and we would do this like I'm doing it. Okay. And we would not just guess the numbers. You would not do what I'm doing, just guess numbers. We would actually go do some research based on previous year's numbers and calculate. Okay. So that's what we would do, is we would calculate it on exact numbers so that we would get realistic numbers into our cash flow forecast. Okay. And now I'm just pumping in numbers here. And the reason I'm doing that is because I want to show you an example of how it would be done. All right. So let's just use those three. Next year, I expect to do this amount in bread, this amount in pastries, and that amount in cakes, giving me a revenue forecast of $20,000. Okay. So this is my cash flow forecast. And this is the main part of your forecast. Okay. So that's the sales, which I got from the previous template. And now I've got the actual, this is my actual sales forecast. So let me give you an example of how you were doing this. Let's say this was my projection for next year. Okay. Then I would go through all my business expenses. Let's say my accountant is, I pay my accountant $200 a month. Let's say my marketing and advertising is $750. Let's say my rent is $2,500 a month. Let's say my telephone is $120 a month. My utilities I expect to be, they'll be probably higher, $750. My bank and credit card fees, I can put in a formula in here. So let's say I'll work it out on 3%. Let me just do that. Let's say I'm working on 3%. Let's see, C7. There you go. So it can automatically calculate how much my bank and credit card fees are. Let's say I've got 2 employees that cost me $4,800 a month. Employees are getting very expensive now. Let's say I take a salary of, wait, maybe that salary, that should be higher, $7,800 a month. Okay, let's say I take $4,000 a month. Let's say I have loan repayments of $654, $254 for insurance. And let's say I've got, I don't know, another $1,200. Okay, so this is my scenario for next year. Obviously, each one of you would go through these numbers and do it for yourself. So, and in this case, I'd put my opening bank balance here. Let's say I had $5,416. So this would be my business scenario. So I know that in January, I'm going to have an inflow of 20,000, outflow of 25. February inflow, outflow, March an inflow of 69, outflow. All of these all of these numbers are numbers that I'm projecting for the new year. Then you've got to make decisions as a business owner. So let's see what my options are. Let's say, for example, this is a new business. Maybe I will give the business a loan and get a bank loan. Okay, so you'll see now that my cash flow at the end of year 1 is positive. But let's say that's not an option. Let's say that's not an option. Let's see what else I can do. Maybe I'll reduce my salary to $2,500. Okay, maybe I will, instead of having 3 employees, maybe I'll only have 2, or maybe bring people in part-time and things like that. Let's say I reduce these expenses to $800 a month. Okay. Let's see what else. I renegotiated with my landlord and she gives me a rent of $1,950. You see what starts happening is you can make adjustments on what you project to do. And typically what I like to do is I like to do a worst case scenario, a probable scenario, and a best case scenario. That's typically what I do. And then at the end of every month, okay, I would take my bank statement and I will fill in the actual amount. So every month on the 15th, like I was telling you, this is exactly what I do. I'll put the customer's name in there, say Staples have paid me $2,541. I'll say the city of, let's call it big city. There you go. Let's say they've paid me $25,000. I will put in all these numbers and I'll put my actual expenses in here. So what I'll do then is as I go along, I will update my forecast based on actuals. And you can do that for a retail business, or you can do that for a service business. So it doesn't really matter, but this is what I've used for the last 25 years to run my business. And it is the best decision I ever made. Why? It ensures that every single month, I know how much money I have in my bank. Also, it ensures that I do not run out of money. So let me just summarize. And remember, you can get a copy of the slides and a copy of the recording if you like, and I'll send them to you. But let me just summarize what I think every single one of us need to do immediately. Firstly, you've got to create a home budget. And remember, over the next 2-3 years, you want to take the least possible amount of money out of your business because you're almost trying to regrow your business. Because you're trying to regrow your business needs capital to grow. So you want to take the minimum amount of money out of your business. And if you don't have to take a salary, if you can live off a partner, I think that's a great decision. Secondly, you want to manage and reduce your overheads. You want to try and identify, is there a way for you to reduce your overhead, your outflows? And only you can do this. You can sit down maybe with your accountant and calculate it, but you've got to work out how to reduce your overheads. You want to update your cash flow forecast regularly, just like I showed you. You know, you create you do a sales forecast, you put in your actual numbers, and then at the end of every month, you want to go back and you want to update it to see if any changes have taken place, especially because we got inflation now, and we don't know what's going to happen over the next 12 months. Well, I don't know. I'm the eternally optimistic person, so I always think things are going to get better, but I don't know that for sure. The other thing you want to do is you want to meet with your bank and see what sources of funding they have. Also, go and do research on government programs. You'll be amazed at what programs there are available out there to give grants for small business owners. The other thing you want to do is you want to manage your receivables, and you want to manage them really, really well. You want to make sure that you collect your money on time. You want to negotiate with your suppliers and obviously pay them on time, but you want to negotiate terms with your suppliers if you can. Speak to your landlord. Maybe now is an opportunity to renegotiate your lease. Speak to your accountant. And finally, and most importantly, never give up. I think that this is one of the most important parts of you and I building our businesses over the next few years, is that we've got to have a cash flow forecast, because I believe that every one of you can survive. I really believe you can survive. But the only way you're going to survive over the next 3 to 5 years is if you manage your cash flow. If you don't manage your cash flow, you are going to struggle. I've given you the tools, so use them and grow your business.